What's up, everybody? Back with another market recap. If you were trading with me earlier today, you definitely caught the ES shorts off market open. We'll go over that trade in a little bit. I want to go over a couple different things later today, and I want to show a small video clip, and then we'll talk about the video and what it means and everything like that. Remember earlier in the week we were talking about Powell, the Fed talking about cutting interest rates, so pushing the market back up. Now you see how the market plummeted the past 2 days, and I want to go over why this happened and put some logic behind it. People be like, well, if the Feds are going to cut interest rates, why did the stock market drop? And there's a strategic reason why that happened, and we'll go over it in a little bit. I want to show a video clip, and then we'll go over that, and then it starts to make sense, and then you'll start to understand how the banks move the money and how the Fed actually works. It's kind of mind blowing how manipulated the markets are. But let's go over the trade we took earlier today, and this is a very simple trade, clean breakout. So we had NFP today earlier, 8:30 in the morning, big plummet down, came back up, retest this trend line before market open, and we got in off the market short or the break of the lows, like we were talking about before. That wait for that first 15-minute candle to form, and then we take the break of the lows of that candle. So we have the highs and the lows of the candle right there. Entry was literally the break of the low with the momentum of the market. Took entries here, rolled them down till the market stopped, trailed the stop loss. But this was the R&R. It's a 40-point stop, like always. Boom, beautiful trade. It was more than another 4-to-1 R. Yesterday we caught a 4-to-1 R too. So we're doing good. We're doing really good. Now, you could have caught another trade after retest of this line here. So if you, a lot of times the market comes back to retest these wicks that was never retested. So you have a big candle that blew through this wick without really coming back to retest the zone. It came back and retested this level here and continued to retest these lows. Couldn't break these lows, but people are already taking profit. It's the end of the day on Friday. Nobody wants to hold their trades over the weekend, so they end. I want to go over this short video is the one I was talking about.
Once they decided to leave interest rate steady, but the policy statement and Jerome Powell's press conference actually suggest a September interest rate cut could be on the table. Stock market investors got what they wanted because even before this meeting, the Fed funds futures have already priced in an over 90% chance that the Fed is going to cut interest rate in September. So for this meeting, stock market investors are simply just waiting some kind of reassurance or confirmation from Powell or from the policy statement that a rate cut in September is indeed coming, and now they get it. Treasury yields moved lower after the Fed decision on Wednesday afternoon, but that is partly because the markets already priced in this decision 2 weeks ago when we got a June CPI report that is much better than the market's expectations. It's also worth noting that, yes, the Fed in its most recent meeting laid the groundwork for a September interest rate cut, but that is not something that is written in stone. We still need to price in the July jobs report and the economic data in August before the next September Fed meeting. Yes, the Fed is now widely expected to cut interest rate in September, and that is good news for consumers, and that means lower mortgage rates, lower car loans, lower credit card interest rates. These are really good, but at the same time, the economy and the jobs market are actually slowing down. Consumers are really cutting back their spending, especially for discretionary items. They try to save more for staples where everyday help.
See how she's talking about the economy starting to slow down? Today, NFP came out with less people applied for unemployment than last month, and less people applied for unemployment than expected. So what she's saying is not super accurate. They're talking about the market slowing down, but there's more people now working than there was before. So that's some of the red flags you got to watch out for, because the market's super manipulated.
Also necessities. The widely expected September interest rate cut is a really good news for consumers and for the stock market. But at the same time, I still suggest to take a closer look of what's going to happen over the next couple months. We still have a lot of uncertainties in the economy and also in the stock market. That includes an upcoming presidential election, and the Wall Street great rotation, which is happening right now. Investors are really offloading their technology shares and trying to move into the lagging sector of the stock market.
All right, let's go back over this and go over like, all right, if the Feds were going to cut interest rates and it was going to be good for the economy, why would the market plummet? Now, let's say if you had $1 billion sitting in the stock market, right? And you know the stock market was going to go up, but you could get rid of a lot of that $1 billion or most of your shares right here, push the market down to a point that you could get a better price and then ride the wave back up to make even a newer high. See how manipulated the market is? So you got people here saying, why would I sell at the top? I could sell here, push the market down, get a better price, and then make another new high and just make way more money than I would have if I just held from here. So you could take profit here, push the market down, force the market to go down, and get a better price on the bottom and continue to buy on the way up. There's already a high chance that the market's going to cut rates in September. The rates cut, loans are cheaper, money's cheaper. You could get cheaper mortgages, keep cheaper car loans. It just boosts the economy, right? So that's the reason behind this push down. This is all manipulation. This is all people taking profit here because they know the market's going to come to a better price and they can buy at the low with more money. So yeah, that's the reason behind the push to the downside. And we'll keep pushing to the downside until we catch some type of support and break some trends. But for now, we're going to follow the market. Here it made perfect sense. A lot of people are like, oh yeah, we're going to go higher. Even I said it. Feds are going to cut interest rates. We're going to go higher. What the market do? Took profit, dumped it. They're going to probably continue to dump it. Even though online is showing people are scared that we're going to be in a recession. It's not a recession coming. Look, the U.S. economy is getting close to a recession. No. As soon as they cut rates, it's going to push the market back up. They know what they're doing. Super manipulated. But what's that mean for us? Since we could see that, we learned that, we've been studying that, we could take advantage of that. We could follow where the money's going and just ride where the money's going and take advantage of all the moves. Now that we see that, we could start to plan those type of moves that are coming up. Especially with the new presidential election coming up. Even if it slows down from now till September and November, it's going to pick back up again. Whoever wins. All right, so we'll go over a market recap or a market review on Sunday to plan for Monday. But for now, that was the recap. Showed you the trade that we took earlier today. And I want to show you that little video about what was going on with this push down and what everybody's talking about right now with the economy and the logic behind it. It's all manipulated. It's pretty cool once you learn that. Like you could start to see the moves before and learn the psychology behind it before you even know what's going. Before a lot of people know what's going on. All right, everybody, check back on Sunday. Good luck trading. Well, have a good weekend, and then we'll get back to the charts on Sunday.